set the scene here. Why have we seen this uptick in so-called NAV lending?
Well, fundraising's become really, really hard, and traditional banks are scaling back. So private equity firms are having to get creative with how they borrow cash and return cash to their investors, and also they need cash to make new investments. So this is a gap that these alternative investment managers are trying to fill.
So give us a sense here when we talk about sort of what's baked into this, the size of what we're talking about here, Laura.
Well, Apollo, for instance, has a pipeline of around $4 billion of loans that they're lending to their private equity firms. That could grow much, much bigger. I mean, there's other players as well, like 17 Capital, that are raising funds for about $10 billion, just specifically for NAV financing. So it's potentially booming market that's set to grow.
Okay, so Apollo obviously making waves here. When you're in reporting, what other firms bubble up to the surface as building out their capabilities here?
So HPS has been one that stood out that is trying to do a little bit more. They've recently hired someone from Goldman Sachs, the bank, to come in to try and focus their efforts on NAV financing. As I mentioned, 17 Capital is a firm that's really making waves. There aren't a huge amount of players in this space. It's ripe for people to come in and to try and, capitalize on that opportunity, which is what Apollo is doing.
Yeah. What's the risk here, Laura? I mean, just for those folks who don't kind of understand how this works here. So when you're doing that type of borrowing effectively against other portfolio companies here, I assume, A, they obviously have the ability to do that, meaning the legal ability to do that. But does the risk also transfer back to those portfolio companies should something go wrong?
I mean, the loan to value on these loans for now is fairly low. It's around 10 to 30%. We have heard of some instances where it's gone to as much as around 50%. So it's not without its risks. Also, the cost of financing isn't cheap. We're talking around between 5 to 10%, and obviously it's floating rate as well. So for the borrower, as interest rates increase, their borrowing costs increase as well.
Yeah, and I mean, to that point that you have to pay up for this type of financing, how big could this market actually grow?
Well, it can be quite expensive financing, but there's huge, huge demand for it. So I think we are set to see this market grow. At the minute, it's around 100 billion, but I mean, forecasts are saying that it could be anywhere up to 700 billion by the end of the decade. So huge potential for growth there.
Yeah.